Good afternoon, everyone. It is March 17th. Happy St. Patrick's Day to everyone. So, while you're here, now's the time to pull up a comfy chair, grab yourself a green beer, and let's chart the markets. Because, you've heard the saying, save the drama for your mama. Well, there's lots of drama going on, and it's real easy to get sucked into someone else's tornado, isn't it? Like it really, really is. And you have to start asking yourself, hey, um, I don't really know if I like it in the tornado. I got to get myself out of it. And how do we do that? Well, we do it by understanding and reading and interpreting the language of the market. Right? That is what we do. And at the end of the day, when we kind of sit down and decide that, hey, we're going to trade today or we want to learn how to trade, period, we've got to ask ourselves, what is our edge? Right? So the next time that you sit down at your desk or in front of your screens, ask yourself what your edge is. Got to have an answer. And if it starts with it's the X spaces that I spend my time in, or it's all of the subscriptions that I get about the market and who knows what else. Or maybe it's the news shows that you watch. Maybe that's it. I don't know. But if it is, for example, simply about you listening to other people, start over again. Simply start over again. Because that's not what it's about. If the answer is when you walk into your office or to sit down at your desk in front of your screens, if the answer to that question is the knowledge that you possess, allowing you to wake up in the morning, sit in front of your screens, and make decisions on what and how you trade all by yourself, that's the only answer that matters. Because until that is your answer, you're going to be constantly chasing your tail. Constantly chasing your tail. And I don't think that's what anybody wants. And in order not to chase our tail, we just have to try and strip out all the BS. All the stuff that maybe we don't necessarily need to know. That's okay. Maybe these things we're listening to in spaces and in our social media feeds and whatever we think our edge is isn't really our edge. Because it's not the edge or your edge until you come up with it. Until your skill enables you to create the strategy and execute. Now it sounds hard, but it's really not, right? We have some very simple things that we can do to try and take the noise out of the market. Because that's all that stuff is, right? It's just noise. Blah, 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 noise, noise, noise. At the end of the day, you may have listened to a lot of really intelligent people, but can you actually trade any of the information they gave you? Sometimes yes, sometimes no. But we just have a simple set of rules that we follow to take all the noise out of the market. But it's not just our tools that do this. You have to have the discipline and awareness not to follow. To be able to think through a scenario all by yourself, like big kids, without training wheels. And make decisions. Because until you're there, you're not there. And it's a process. Right? And we try to strip out all of the simple stuff for you to try and make it easy. This is our chart of the Dow. 4-hour chart. The vertical lines represent when our 4-hour, daily, and weekly sell signals fired. Now, This is one of the simple things we do. Use a 4 hour as an on-ramp onto a daily with the dream that we get a runner, that the trade actually turns into a runner. So why do we do this? Well, I just want a good entry, like everybody, so that I can get ahead earlier. And that's what the 4 hour does. 4 hour fired on the 12th of February. Then we get our daily signal, 19th of February, and then our weekly signal fired when? Well, 2 weeks ago. So that wasn't all that hard. Where does it get hard? Where does it get really difficult, and where do we start to lose our confidence and maybe question why we're doing this? It's when we use too much leverage over too short a time frame. It's as simple as complicated as that. That's what we do. And then all of a sudden you're chasing your tail. Whether you trade options, whether you're trading commons, it doesn't matter. If you're doing it, you're doing it. Right? The idea is not to front run the chart. The idea is to simply follow. Now, this chart of the Dow, we were obviously kind of toppy. We knew that was going on up here. Look at the massive run we've had. Right now, what would have this same analysis that we've used up here done down here? Well, it would have given us the same kind of setup. A 4 hour entry, a daily entry, and then a weekly entry. Simple. That would have obviously been your weekly. Your daily probably would have been somewhere in here, and your 4 hour would have been somewhere in here. And all of this, that's yours. That's all yours. Again, it sounds easy, but where does it get hard? It gets hard because we make it hard. Because we spend too much time worrying about what other people say and what other people do and what other people did and what other people said they did in the past and what they say price did in the past. Well, that's yesterday's news. We're only concerned about the here and now. And on this chart, we had exactly what we wanted to see. Confluence. And I don't care if it's confluence up or confluence down. Who gives a crap? Because ultimately you're indifferent to price. The only time I care about price is if I'm on the wrong side of the trade. That's the only time I care. And I don't want to be there very long. Excuse me. So whether, it's something down here that we catch that kicks it all off, or where's that weekly? There it is. Or something like this. Start simple. You have to frame up how you trade. And I'm not telling you how to do that, of course. I'm just kind of sharing how I do it and what's worked for me. And I'm sure there are other people that are sharing their experiences with you as well. And all that's great. Other people's battle scars are better than your own, right? If you take the time to learn from them. And I have plenty of those scars too. Which is why this was developed. It's just a simple way to filter out all the nonsense. Right? I'm always looking at the 4 hour chart to find a 4 hour entry long or short. Now, on this 4 hour chart, this looks a little bit choppy, doesn't it? Well, that's only because the time frame is choppy, or the time frame is smaller. Get it onto the daily, get it onto the weekly, not so much. Right? And that's multi-time frame analysis. And this is why we do it. Because when did everybody start barking about the Dow? Last week? Maybe the week before? When would you have gone short? Up here. That's not hard. But again, we make it hard. Right now, if you're trading crypto on a chart like this and you're trading on a 5-minute time frame at 100 times, yeah, it's not going to work out. But you'll continue to drive your car into the wall over and over and over again until you prove yourself wrong. Just save everyone the drama. If you find you're getting chopped up and what I just explained is happening to you, stretch out the time frame and drop the leverage. Give yourself the ability to breathe so that it can do this. Because if you're leveraged too much, you're never gonna be able to take a real runner because the little pullbacks will get you. But just simplify what you're doing and start by blocking out all of that BS stuff that's really not important. And that's news, analysts, reports, all that other stuff. If it's coming out of someone's mouth, it might be problematic. And that includes that guy that loves Bitcoin more than life itself, and every other analyst and person with an opinion, including myself. I'm encouraging you to do your own due diligence, but the only way you're going to do that is by learning. That's it. The only way you're going to do it is by learning. Now, we talked last week about this chart. Let's start with the weekly. This was our Bitcoin chart. And last week, if you recall, this level here was the weekly T line, which is this yellow line. So I haven't moved this level. I just left it here. So you can see now we're trading above it. That's good, right? It is. That's better than trading below it. But you don't want to bet the farm yet. You were trading above it up here too, and you still had this open. This is our filter, right? This is how we get rid of all the stuff that's not important. We filter it out. In here is a lot of talk, a lot of people's interpretation, opinion, news, whatever. At the end of the day, the market was being very clear. It hadn't decided to go bullish yet because of this filter telling us that you're still in a downtrend. Now, we're faced with that again here on the weekly. And everything, when you look at these last 2 weeks that you see on this chart, those are nice green candles. It's easy to get excited about stuff like that if you want to go long. But beware, because the market still has not told us or given us its confirmation, like here, that it's ready to go yet. Now, we'll look at these 2 green candles and go, oh, that would have been a great entry, and that was the bottom and we should have longed there. Today we say that, right? We can say that today, but we don't necessarily know that in an hour from now, a day from now, or 2 days from now, or at the end of the week, this candle will look the same. And even if it was to close here, is that your confirmation? No, it's not there yet. What are we really looking for? Using this weekly as an example, so what I've done is I've just brought up our Z-score dashboard. Okay, and we're just, SPY's our benchmark. We have gold, XOK, XLF, obviously the Bitcoin that's on our screen, and we're also using IBIT, which is the Bitcoin ETF, as a benchmark. So they'll kind of cancel each other out. But the point I'm trying to get you to see is what you see down here, below zero. That's a lack of relative strength, and over here, above the zero level, you have much more of it. So what am I trying to do? After a big move down as we've had, I'm looking for this relative strength to break the zero level on the Z-score dashboard. I'm looking for this break of zero, and then it starts to turn green, and a buy signal, like down here, for example. right? So you get, in this case, the buy signal came first, and I would have been very happy with that, especially on a weekly chart. But the confirmation on the weekly came for me a couple candles later, right? Maybe 3 candles later. No, 2 candles, which is fine, right? I'm already happy with this, and you're on, you're on full alert, right? You have stops set and everything. You're protecting yourself as much as you can, mitigating risk. That's why we do this. And that break of the 0 level was really important, because look what happens to price. So is it a given every single time? Well, nothing's guaranteed, but it's the type of confirmation for me that really is important. Here's another one. Break of the Z, it's like here, this came first in this case, followed by our buy signal, and boom, price moves higher. What are you being told up here? Actually, here, let's see if this works. So all I'm trying to demonstrate is that you had the relative strength, right? And prices moving higher. But you notice the divergence. So you have relative strength, although above 0, which is great. But you can see how it's sliding down to the right. And then you kind of lose it in here. What was price doing? Price was moving higher. And I want you to pay attention when you see things like this. Price is moving higher, relative strength is failing. So coming out of this type of divergence like this signal here and this break here is really, really important. I find them very strong, especially over the longer time frames, right? Because the longer time frames are just going to be strong more naturally anyways. So pay attention when you see the fade, and then the break, and then in this case the sell signal. And the same applies. You can have relative strength rising as price is falling. Same kind of thing, just in reverse. So just notice, when once you've seen it, it's going to be hard to kind of unsee it. But these are the ones that really are strong, especially on the weekly chart. So naturally, here we are down here with current price. Yes, we're trading above the T line. That's great. Yes, we're trading above the 5 EMA. That's great. That's last week's T line level. What we're waiting for is not just the sell signal, and this is just me, but a break of the 0 level on our Z-score dashboard. Now, if you look to the right here, you can see that Bitcoin and IBIT is one and the same. So it's basically sharing that bottom slot. What can we learn from this dashboard about the relative strength of Bitcoin on this time frame? If we start to watch it move up slot by slot by slot, hey, maybe that relative strength is coming back in again. So that's the rotation that you hear people talk about. That's just an example of what you might see in the dashboard, right? So as that rotation is taking place in the market, if you're following the right assets, you'll be able to see that rotation take place. Now, what's one of the things that is really important to me is not over analyzing tickers, because a lot of people are spending so much time trying to find something to trade. You don't have to do that. You really don't. There's no need. I encourage you to find a handful of things that you're interested in or you want to trade, and trade those. Maybe it's the futures contracts. Maybe it's Tesla. Maybe I don't care. But the point is, don't overwhelm yourselves trying to find new things to trade each and every day. And if you're doing that, chances are, what else are you doing? You're probably looking online, in social media, in your spaces, in your other groups, through your subscriptions, where people talk about what they think is hot and not. That's where you're getting your info from. Did you learn anything at all that would help you make those decisions for yourself? I hope so. That's kind of why we do this, because ultimately, when you're asked again, what's your edge? Your edge is your knowledge. Self-possessed knowledge that no one can take away from you. That's your edge. That's it. It's as simple or as complicated as that. But it's your knowledge that you acquired. Now you just have to use it. And a lot, we see it in Telegram, we see it, in here on YouTube. There's a lot of people that are getting good at reading the language of the market. They're getting the understanding of what the rules are. Current price revisits past. First attempts have a higher probability of failure. All these little things. But putting them into practice is a little trickier. Just by learning how to interpret what's on the chart isn't necessarily everything you need to know. Analysis and planning and executing trades are two very different things. So one of the reasons I try and get people, I know I harp on it in Telegram, one of the reasons why I want you to trade less assets is because I want you to focus on things that interest you so that you're not panicked and you're not spending useful time trying to find something to trade based on a reco when you should just wake up, sit at your desk, have a list of 5 things, and those things intimately. You wake up in the morning, you probably know what the chart looks like before you even turn your screens on. That's where we want you to be. And I can assure you, you're never going to be without something to trade if you want to. And you'll also appreciate that not every waking moment when the market is open is meant for you to be trading in. That's the other thing. Right? That's where the overtrading comes in. We don't want you to do that. Just want you to follow the chart, not to front run it, and do what you're told. So when the chart says, here's 1 hour Bitcoin, when the chart says buy, you buy. And when you see these things, right, when you're coming out of a move, you have to know that you're going to chop a little bit, okay? Not everything is going to be like a V shape like this, or here, down. You can expect that chop. And you have to manage it. And how do you manage it? It's actually not that hard. You manage it through mitigating risk, through getting good entries, not taking on too much lev, and adjust all that for the time frame that you're trading on. Now, one of the things that we do in this with our signal script is we allow you to, or we've included, take profit levels, stop levels, trailing stop levels, so that, let's say you're trading Bitcoin at 20 times. That seems rather aggressive, but we'll just leave it there. And let's go back to Bitcoin on a 4-hour chart. All right. So we want to add some structure to your life. That's what we want to do. We want you to be, this noise that we talk about, the noise that we're talking about comes from all the stuff that you're not controlling that comes in your head. And I've had people tell me that, you must really like being a hermit doing this because it's almost antisocial behavior. That's what I'm told. But it's not. It's your happy place where you get to focus. And I'm showing you a 4-hour Bitcoin chart. And as for as nonsensical, I'm just going to take that T-line level off. For as nonsensical as the market has been, are you actually going to sit here and tell me that you can't trade it? You kidding me right now? 4-hour chart. There's your entry. There's your 5% stop loss. You were not hit. So you're still in the trade. This one candle literally hit all your TP levels. The max being 100% profit. 30, 60, 100. That's how this is just set up for demonstration purposes. But also, I'm trying to show you that literally you can hit 30% profit levels, 60% profit levels, and even 100% profit levels with 20x on Bitcoin on a 4-hour chart. Is it a little rich? Yeah, maybe. But nothing that you can see now that you can't manage. Here's the other end of that. Right? This trend really never broke, by the way, if we go back here. So this one big candle would have done all the work. But even on this pullback, because you understand how we do this, how we chart, look, this thing never broke. It never broke trend. And then the next candle, remember we talk about the two equal bottoms when they start to form? Well, that's telling you, here we go, and look at your T-line and 5 EMA, up and to the right. But again, if we take the short, and this is, you can automate this, by the way, right? Basically, if you took 33% at every level, you'd be done. Boom, boom, boom. Here's another example. There's your sell signal. There's your 5% stop loss, did not get hit. 30%, 60%, 100% profit. You're probably well into 150 plus. Why does this work? How does it work for you? It works for you because it does all the stuff that you're not doing naturally. Planning out the trade. The trade management component of our script is worth its weight in gold because it's going to get you to take your profits and manage your risk habitually. You're going to be like a robot. And I'll be proud as hell if I had anything to do with that. Here's another example. Buy signal. This is just our script, right? This is simple stuff. There's your stop loss, never got hit. Take profit 1, take profit 2, take profit 3. That's right, that's another 100%. Sell signal. What happened here? Nothing. We would have got stopped out at the end, right? Or our trailer would have kicked in. But we didn't hit anything here. Next one, there's your buy signal. 5% stop loss does not get hit. 30, 60, 100. This is why I say I know you guys can do this, and because I know a lot of you are. And it took a while to get comfortable, didn't it, doing this? I know that it did, because I hear the pain. Because you want to be the one to learn and then apply that learning. And I get that. Right? But this is going to help you do that. This is going to help you focus on the right things. So, while you were shorting Bitcoin over here and longing it over here and longing it here, getting stopped out over here, and then longing it here again, what were you doing? You were making money. You were making money as compared to looking at your social media feed, trying to figure out what the latest and greatest thing is, or sitting in an X space, listening to quite often very smart people yell at each other, or God knows what else. Listening to analysts, or maybe researching the latest dream that Michael Saylor had. I don't know. Nor do I care. Because they're not, I don't know them. Right? They're nothing to do with me. I don't even care what they say. Because I'm not listening. Because I'm doing this. And I'm basically serving this up to you on a silver platter. It's not that hard. You can't, nothing makes me crazier than listening to someone who's confused all the time about the same thing. Why? Who gives a shit? Pardon my French, but who cares? You want to swing trade? Still want to use 20x? Well, look, this is the daily. There's your 100 level right there. Could you be patient enough to just follow the chart and let it do what it's going to do? I'm serious. It's not hard. It really isn't. But this is how you can adjust your time frame, like so the 4 hour, and this is what's great about how the trade management component of this script works, whether you're using it on TradingView or TrendSpider, it's all the same, is that it allows you to adjust your stop levels, your how much margin you're using, or none at all, and your take profit levels, and adjust them to the time frames that you're comfortable trading. So, if you just want to trade the 4 hour Bitcoin chart, is this pretty easy to do? Yeah. And most of the moves on the 4 hour, the way that it's currently set up, 20x, 30, 60, 100%, the majority of them get taken out at 100. And if you were willing to let things run, you might even get more. But if you're just following the rules that you've set for yourself, you'll see how well this works. And it keeps you honest. So that you're doing what you should be doing at the right time. There's another one. There's your entry candle. You did not get stopped out. Boom, boom, boom. Actually, you would have had fun with this one because you would have been able to get in here several times. Because this one would have taken you out right away at 100%. And by automatically taking your profit, that is going to pad your account. But if you leave it up to yourself, 9 times out of 10, you won't do it, right? You start fantasizing about what's coming next. Just use the architecture that we've given you here, and you're probably going to have more success than failures. And you're not even dipping your head down the technical analysis rabbit hole yet. You're just following some simple rules designed to mitigate risk and have safe, profitable trades. That's it. Again, I guess I just want everyone to understand, you don't have to reinvent the wheel. You don't have to reinvent the wheel. What else do we use that help us determine what direction price might want to go and how quickly it may want to go there? How about a volume profile? And a volume profile is included in our script, which comes with, like in TradingView, 9 moving averages, and, confluence areas. It's a ton in here, plus trade management, plus the signals. The heavy lifting's already been done. And we include the volume profile because there's going to be times like this where here's our, that thin red line is your point of control on the volume profile. These are just levels that we've dropped in here before and price hit them. But what do we know about this volume gap? we know that if we can get into it, if price can get into the volume gap, and that's kind of what's interesting about, let's try and find that 4-hour signal, see where it comes in. See if we bought ourselves any time. See one there, and there, see where these come in. There we go. So this 4-hour signal we never would have left this trade on the daily. Like as soon as it starts moving on the 4-hour, go back to it for a minute, this little pull back in here is what caused the sell signal. But on the daily chart, which is why we're doing multi-time frame analysis, you'll notice that our trend never broke, right? What's going on? We've got the divergence between the T-line and the 5 EMA up and to the right as it gets into the volume gap. That's exciting if you're long. That's the opportunity, right? That's what you want. That's why we do this. And that's not difficult. Do we understand where this volume gap came from? Kind of how it got created in the first place? From this. So when you see these type of, in this case, these big moves down, understand that later on, they are going to create those volume gaps that you'll see right in here. And that for you is, the trader, is opportunity. And, both, here's the other one to the upside, another one up here. Again, caused from this big move to the downside. It might even be clearer on the weekly. Yeah. You surely want to stay out of this one, right? Because that would be a problem. But many aren't even looking at the weekly chart, and I wish you would. Because it takes out a lot of the noise. A lot of the noise. Okay. Does this look familiar? This kind of price action? Right, this is the 500-day moving average on the daily. This is the 1,000-day moving average on the daily. These levels are really key, especially this one in here. So as exciting as it is to see all this this big gap here, because that's obviously opportunity for the trader to the upside, be mindful of the resistance. All right, just again, we remember when we were dealing with this, it was very frustrating, wasn't it? Test, fail, test, fail, test, fail. Looks like you want to break through and then fail. Well, here we are again, doing the same kind of thing. We have our buy signal. That's awesome, right? That's what you want if you're long. Gotta love this. So look what happened here. Now, relative strength doesn't read like price typically, but in this case it almost did, which is very strange. But look, here's your buy signal. There's your break of the 0 level on the Z-score dashboard. And again, this relative strength was almost non-existent as price fell. And then you get a hard rejection from the 1,000 MA. So, for those that aren't using it, these just like, that's just a red and green candle. Just a reversal candle. To me, it's not. To me, it's a rejection of 1,000 days of price history, and that's meaningful. And, we'll talk about what we did with 1,000 MA on oil later, but it's a meaningful level. So yes, we've got a buy signal. That's great and encouraging. And the hard rejection at the 1,000, again, this was the first touch, right? This is one of our rules. First attempts at a level have a higher probability of failure, and this one was a hard no. Came back to this level that we had dropped on here, but you can see that there's enough bit of a basing that's happening here. And this big pullback never really caused us any damage. And then we get this. This is significant reversal, and I like the fact that it's somewhat organized and it's not parabolic. I would take several of these candles over one or two, um, crazy elastic candles any day. But what was nice is you held that zero level on the Z-score dashboard and on the relative strength stuck. And now you can see what happens when you have relative strength supporting price. This is, for me, a very interesting level. If you can break through here, get into this volume gap, I don't see why you can't peck away at this shelf and this level up here. So what's price done here? So these candles that got the hard no at 1,000 days pulled back, you bounced, and now you're doing what? You're going to take out the previous wave's high. And that's what you've done at 1,000 days as you broke through it, because the second attempts are more likely to push through. The first ones have the higher probability. The second, third ones, sooner or later you should break through, as long as the relative strength is there. So this could be a meaningful run, but we don't have, as of yet, on the weekly, a buy signal or a break of the zero level on our Z-scored suite. And to me, that's really key. So someone might say, well, are you telling me that you're going to wait on the weekly to get those before you would enter that trade? Not necessarily, because the way that I'm trading, and we talk about this all the time, is that I'm using the 4-hour as an on and off ramp of the daily and any subsequent time frame that you might be tied into on a longer basis. So the 4-hour is my entry. It's my on ramp and off ramp to the daily. So what I will be looking for is the confluence. So we have our 4-hour entry way back here, right? Kind of do this big pullback. We lost relative strength. We regained it, and prices staying elevated. Then on the daily, we finally get our buy signal, and we're waiting for, on the weekly, that buy signal here, so confluence on this longer time frame with a break of the zero level on the Z-score dashboard. So the answer is I would already be in the trade. So I'm not necessarily waiting for anything here. What I'm waiting for is the confluence, that on the longer time frame, this is probably a significant kind of move. Now, even on the weekly, if it goes 3, 4, 5 candles and then fades, go back to where you entered on the 4-hour and daily. So that's a really decent move. Does it run up or down? Who knows, right? That's, just don't know what comes after every candle. But I think what's important is this is what we're talking about. This kind of confluence. That's the 4-hour sell signal, daily sell signal, weekly sell signal. When is everybody crying wolf? I will show you. This level in here is kind of structural, right? You don't want to lose this, and they lost it. Now we can argue, should it be higher, should it be lower? Doesn't really matter, does it? Because look where price is. Now, if you've been following this group for more than 5 minutes, look at this current candle. Now, at one point, this was a solid green candle today. Right? So at one point, you were looking at a solid green candle that was trading above the T line, and you decided to cheat. You decided to cheat. I'm going to beat everybody to the door. And I'm going to hammer this thing now. And I'm going to hit the buy button. I'm trading above the T line, and I'm going to start hitting the buy button. It's going to start hooking up And you're already looking at that 48.5 level there as a target. This is why you don't friggin' cheat. This candle is ugly. I hate this candle. Why do I hate it? I hate it because you pierce the T-line as a test and you fade like a mother. You know what? And you close below the 5 EMA. This is your nightmare scenario. Testing the T-line and failing and pulling back and closing below the 5 EMA, that's your nightmare. This is starting to look like the failed breakout, just like this was, and so on. Right? There's your top area. You're going to come back, take out the previous wave's low. This is not a nice candle today. And why do I hate it? I hate it because there's no relative strength. Whoops. Right? If we were going through a phase where the relative strength was coming back in, something like that, no. It's going to look worse on the shorter time frame. Because it just essentially gave everything up. This is still open, diverged down and to the right. Even on, these are just green candles in a downtrend, folks. Don't get excited about this stuff. I'm getting long in the tooth if I hear, oh my God, did you see that candle one more time? I'm going to kill myself. Like, come on. They're just green candles in a downtrend. How do you know this? Because our filter is telling you that. This is not hard. We make it hard. You make it hard. This is not hard. That 4-hour Bitcoin chart that you traded the crap out of, making like 100% profit on pretty much every leg here, except maybe one. Were you worried about this red candle in an uptrend? No, not at all. You weren't. Why? Because you were monetizing the chart. That's why we do this. You didn't give a rat's ass about these candles until they hit your profit level. That's the only time you care. They were just red candles in an uptrend, and they actually happened to tag you out. Red candle in an uptrend. Green candle in a downtrend. Don't stress it. And why can you not be stressed? Real simple. Here's your stop loss level of 5%. If something goes wrong off the start, you're going to try and keep your losses as low as possible. I'm using 5 only because crypto has a little bit more of a swing, and I was just trying to protect from getting stopped out too frequently. If you drop it, you might. Then you add a trailer, which we're not showing on here, but we can. Right? You can adjust it. So if you want the trade to run, you're going to use a higher trailer. Right? If you want to stay close and you want to stick to your system, you'll probably want to shorten that number up so that you don't get too much of that elastic effect. Right? Your trailer will trigger you, will kick you out before too much damage is done. But you can adjust all that based on the time frame, just like you do the leverage and the TP levels. So you're protecting yourself. You're making money. You're not stressing about red and green candles. Here, I'll make it easier for you. Do this. How about that? Can you do that? Of course. Now it looks like romper room. It's like kindergarten. You're going to have that stop loss and that trailing stop loss, and that other, how that would have knocked you out. That's fine, right? That's going to happen. But I don't know. I think you took like 100 points almost every time but one here on what we're looking at. And there's no candles on your chart, right? That doesn't matter. Don't worry about that stuff. If anyone was wondering, yes, I have a dog. Okay, right. But look, This is all you need to know, right? Just follow the chart. Hey, there's your buy signal. There's my stop loss. And you're going to set this up when you make your trade, right? All of this stuff's going to be in place, and you're going to put your TP levels in. And then the exchange is going to do all the work. That's why we do this. It doesn't have to be hard. We make it harder than it needs to be. When I first started doing this, did I spend a lot of time and money focusing on things that I thought I needed to acquire to make myself what I thought was a better trader? Yeah. I'd spent money on all kinds of stuff. Newsletters, articles, things like that. Some of it was educational, right? But at the end of the day, the only thing I should have been learning was this stuff. How to monetize the chart. That's it. This is XRP's 4-hour chart. And I'm just trying to show you again, just look at this current wave. There's your buy signal. There's your stop level at 5%. Did not get hit. 20, 30, 100. In fact, you know, you probably had in here another run at it. 20, 30, 100 all over again. There's your short. You know, people tell you, well, you can make money when the market's going up and the market's going down. That's not bullshit. That's real stuff. It's fact. Sell signal. Didn't get stopped out. 30, 60, 100. Remember we talked before, why do people do this? That get introduced to technical analysis or to trading in general. They're simply trying to find a way, many of them, to subsidize their income. That's understandable. They don't want to have a part-time job because maybe they have children and they don't want to have to get a babysitter and pay the babysitter half of what they earned while they were working their part-time job. I get it. Makes sense, right? And it's not unreasonable. But it also doesn't have to be a giant, massive feat that's unattainable. This 4-hour chart is an example of how we did that. That's it. Now, if we were monetizing these runs like we just talked about, and let's say there were 4 of them, and on your part-time job, you're probably trying to make another $30,000, $35,000 a year. What is that? It's like $100 a day or something? Do you think over the course of a day that you would have made that $100? Yeah, you would have made it 4 times. And if you were to do that, you know, $100, $200, $300, a few days out of the week, all of a sudden it doesn't feel like a part-time job anymore. And you never left the house, and you didn't pay the babysitter. This is a means for real people to earn money, to have a real impact on their life. Whether you're a single parent trying to make ends meet, that's understandable. Doesn't matter the color of your skin or your sex, doesn't matter. It's just people monetizing charts. Right? That's all we need to focus on. It's just monetizing the chart. We are hoping on this daily Bitcoin chart, or at least the people that want to go long, I don't care because I'm indifferent to price. I just follow the chart. But if you're looking to go long and you got in, this is a nice run. Here's a red candle. Are you concerned about this candle? If you're in down here, are you concerned about this candle? No. Why? Well, first off, you have a good entry. You have confirmation that you're still in an uptrend because our filter's telling us that. You're trading now above a significant major moving average after a very healthy move higher. That was quite organized, right? Like this almost looked automated. I hate to say it, but you know, it's a pretty organized move up. So you see a red candle. It's not the end of the world. You don't have to be hitting the sell button or anything like that necessarily. You've earned yourself the opportunity to see where this is. This just going to be a red candle in what turns out to be a further uptrend as you get into the volume gap? Maybe. Is this like if we were to say, look at this particular daily candle and say, hey, is it more bullish than bearish or more bearish than bullish? And there's going to be different ways to look at this based on whether or not you're a candlestick reader or not. Right now, that kind of, there's still time left on this candle, almost 3 hours. But right now, it's kind of doji looking, and that would maybe cause some people to say, hey, maybe this run is tired, and the doji is a sign that it wants to take a little bit of a break. And that would be a completely reasonable point of view. I'm going to take that as exactly what I just said, right? But only with caution at this point. I still have significant relative strength, and I'm trading above the levels that I feel are key to my analysis. Trading above the T-line, trading above the 5 EMA, trading above this major moving average. And let's see what else we broke through here to get here. Trading above the 50. Now, I wake up in the night for green candles at the 50. So, you know, this to me is still a very bullish chart. And what's your target ultimately? The 200. I'm sure if I threw the 100 on, it would be somewhere in here as well. But I mean, ultimately, that's what you want. Because that's our basic bull bear indicator on any time frame is the 200 MA. So we're trading below it and have been for a while. So we are still technically bearish. But the only way to reverse it is to peck away at these levels one at a time and start to change the environment, right? Making the chart all of a sudden more bullish. Getting into these volume gaps and pushing higher. And you guys know, you've done this long enough. You know what this means. And I know a lot of you have been drooling waiting for price to get up here, so enjoy. But that's going to be your target. And that target, the 200 MA, see all this here? This kind of bench of past price? This bench of past price ultimately is going to be a level of resistance which includes the 200 and 500 MAs. But this bench here is what's formed the shelf on the volume profile. This shelf down here created in here, and this shelf here created through here. So when you get up into here, this is where you can expect to see a little bit of resistance. That would be completely expected. And you might not want to hang around and bang your head against these levels. You may decide, hey, you know what? That's my target and I'm checking myself out. Totally appropriate. But manage the trade through a system that you know works. Right? Just go back to the 4 hour. Like you're literally printing money on this 4 hour chart. Knocking out all of these. I can actually remove when they hit. So here's the short that didn't work out. You would have been stopped out here. This buy signal, this entry worked out. Not a problem. This worked out. You would have been printing money. And these tools, although they're not free, are designed to help you make money. Right? It's not a newsletter where you get a handful of tickers. It's not anyone telling you what to trade. It's not anyone telling you the state of the world. It's not anyone telling you the state of the market. No one is telling you anything. These tools are there for you to take the knowledge that you've acquired and apply it to this chart so that you can monetize the chart. That's the goal. Right? Simple or as complicated as that. I'm just going to take off the volume profile and I want to look at gold. Here's our weekly chart. Still a bullish chart? Yeah. Trading above, like here's your, look at the support you get from the 20. Now, is it running hot? Absolutely. If it starts to break down, is a test of the 20 completely appropriate? Yes. And if it was to break it, because it has touched it several times, and we know that every time you kind of hit it, probability of failing it the next time goes up a little bit. There's your 20. That's what you can expect. If you don't hold it, expect the 50. And it's not, and it's completely, there's no emotion here. I'm not going to cry so hard that I'm going to melt my own gold or something like that. That's not it. It's completely unemotional. It's just simply doing what the chart's telling you to do. And through all of these red candles where someone was telling you to sell your gold and buy Bitcoin, these are just red candles in an uptrend. That's it. Simple or as complicated as that. Still a bullish chart, and the monthly chart, obviously, is printing a big red candle. Half the month gone. But when you look at this monthly chart, you totally appreciate that this thing has been firing on all cylinders, and you see that the horse is a little far away from the barn. Right? You can see you're trading well above, and I think we talked about this in the last session. You can anticipate a move back to the 5 EMA or the T line. But it doesn't necessarily mean that the sky is falling. It could just be 2, 3, 4 months of red, but hold our filter level, just as an example. Right? So just because you see a red candle, it doesn't mean it's the end of the world. And if this is one of the 5, let's say gold is one of the 5 or 6 things that you want to track and trade, you're going to be fully aware of what's going on with this chart before you even enter the trade. And you're not going to have to reevaluate everything like it's new each and every time. Because that's a nightmare. Right? Starting from scratch every single day is a lot of work. And it doesn't have to be that much work. It just doesn't. There's a couple things I wanted to look at here. This thing, this Zano, which we've talked about before, one of the privacy chains, just got, like a lot of things, hammered really hard. Let's go to the weekly here to take the noise out. And on the daily, we have this big, massive green candle. Now, this is the weekly chart. Same kind of thing. But what do we see? We see this weekly candle finding resistance to date at where? The 5 EMA. So this candle on the daily, super impressive. But let's just be honest about what we're talking about, right? So far, you've got obviously 4-hour, now the daily. You're a little bit of ways away from getting that weekly confirmation. You would need some significant price action, right, to not just start trading above the T line, but also to pull the 5 EMA up through it, so that you can take from where you see here where price trades on the south side to when it trades on the north side. Right? So when you're trading on the north side of the T line and the 5 EMA, don't take shorts. Right? You don't want to take any shorts. What you want to be doing is looking for opportunities through this trend up on where you can enter. Right? Those locations typically end up being, as you can see on the daily chart here, are at or around the T line or 5 EMA. That price will kind of come back to it. Those are your re-entry points to go long. When you're trading on the south side, you don't want to be going long. You don't want to be buying anything. What you'd be looking at doing is simply finding a way to enter short again. And you do it the same way. Look for the T line and the 5 EMA for price to come back to those levels. So we're not all the way out of bright yet on that. And then that brings us to Zcash. Right? What did Zcash... You guys don't believe me that the 50-day moving average is relevant? Sure as hell is. Right? There's another example of it. And that's a weekly bounce on the 50. This is the first touch of the 50, so this is one that we would expect to get some support at, and it looks like, so far, for now, that's what we're getting. No different than the other chart. We're just now trading above the T line, but we don't have confirmation. You remember on the Dow's chart, the daily chart, where we see this doji candle? Let's remember that this candle was a solid green candle, just like the Zcash candle. And now it's not. So it's easy to get faked out if we get too excited. And that's probably happens a lot. Oil, if you guys want to take a look at it, we can, because it too has just gone a little nutty. So what I have on this chart is some fibs. And I just took swing low, swing high. I was doing the quick and dirty thing. Trying to figure out where, you know, if we believed that, you know, fibs mean something. Look where 618 is. Right in here. Right in the pocket. So you have this big move up, right? That's obviously your top, and that's why we're taking this this wick up here, as exaggerated as it is, but it is what it is. And price comes right back to 618. Like, that's really, to me, that's pretty cool. But the trend is still intact. So you had this big move up. What we're trying to show is that this is what happens with volatility and the elasticity that's built into the market now because of all the drama. Swing low, swing high. There's your 618. Is this still diverged up and to the right, the T line and the 5 EMA? Yeah. Still trading on the north side, so you should be long? Yeah. The trend is still intact. Even with this big monster candle, all it did was come back to 618. And that's where it closed, by the way. And this is a daily candle. You know, went from 119 to about $85. And that $85, this big extension, was 618. And it's not a coincidence, I don't think. But this whole thing was still diverged up and to the right. And still is. And this here is the 1,000-day moving average on this daily chart. Right? There's your entry. So people were saying, oh, you know, oil just went through the roof and nobody, you know, it caught everybody off guard. Really? It did? Well, here's a signal. That's the 18th of February. And for all intents and purposes, this one from way back here in January was still good. This is just a little blip, and you cross down because of the consolidation, brings those averages together. It's easy for them to trigger a signal. But, you know, if you're looking at the weekly chart, there it is, right? Like, no, it didn't sneak up on anybody. You had lots of warning. So what does that mean? Does that mean that somebody else knew something was going to happen? Maybe. The smart money is not stupid. So the smart money was buying. How do we know one from smart money from dumb money? Because we just follow the chart. Right? We just follow the chart. And the chart was telling us to buy. And even if you closed your trade up here, which you wouldn't because you'd be looking at the weekly, you have another chance to re-enter. And I'm basically trying to make you understand that it's not a big deal if you're in super early and then, you know, you get a signal to close. And then you re-enter. That's okay. Because remember, you also would have taken profits here too, right? But monetize the chart and mitigate the risk. And we're showing you, just by giving you the buy and sell signals that everybody seeks, whether you take them or not is up to you, but you know, we're producing them each and every day on each and every time frame on each and every asset that we look at. It's just gift wrapped. So all you have to do is execute. This is MasterCard. that we've looked at before. Is this getting better or getting worse? Kind of getting worse. Here's another ugly daily candle. Wicking an MA and pulling back, although, and where do you close? Right at the 5 EMA. And is all of this diverged and open still? Yeah, under a sell signal, so it's still a very, for me, bearish chart. And again, this is going to look very similar to the Dow, right? Where you're going to have that kind of 4-hour, daily, and then weekly sell confluence. And it's not till, we're down in here that everyone's going, oh no, what's going on? I don't know what's going on. All I know is that the chart told me to get out of here. Right? I think this is a pretty obvious channel down here. And what are we doing? We're breaking one level. We're looking for the next level. Did we break the 20 and find the 50? Yeah. Did we break the 50 and find 100? Yeah. Did we break that on the way to perhaps the 200? Yeah. That's what I think we're doing. I'm not saying it to piss off the MasterCard people. Here's Amex's chart. American Express. Didn't have a big red candle today. Let's go to the daily. I guess it did have a big red candle today. I stand corrected. This is another ugly candle. Why? It's just like this, although green, ugly candle. Failure of the 200. All this stuff was open, acting under a sell signal. Ugly, ugly, ugly. This is ugly too. Again, another example where you try and pierce the T-line and get above it, and then you completely fade, and now you're just with a big red hammer here. Close below the 5 EMA. Looking for the 500. And if you look to the weekly, so far is all you're doing is getting a little bit of support from the 100 MA. That's it. And do any of these candles, even this green quote-unquote candle, are these candles at all bullish? Not to me. This big impulse down, this sideways stuff, price is just getting a little support from the 100 MA, waiting for these levels to catch up. And my guess is time and price come together. Remember what we talked about when you have your T-line and 5 EMA open as you're kind of coming down, approaching what you hope to be support. You're not going to get it because this momentum that you see here, it's expressing itself without any consideration for how you feel or think at all. Like you can tell, diverge down and to the right as you come to a major moving average. Did it hold here? No. Did it hold here? No. Is it going to hold here? Unlikely. That's still a lot of momentum. Now you have a little arcing and stuff, but no, it's not going to make it. Ultimately, I believe it'll fail. Why? Because it's already hit it. This is the second time. It's not getting that kind of first touch support. And if I move this over to the right, what's this in here? This is the upper value range on the volume profile. So this gray stuff is light trading. So just like the volume gaps can't hold price up when you fall into them or shoot up into them, well, it's exponential when you have light trading, which this is. So you've come all the way back to the upper value range, which just happens to sit with the 100 MA. And if you lose this level, you start to fall into the gap. And that puts, as soon as you fail the 20, it puts the 50 in play. As soon as you fail the 50, it puts the 100 in play. As soon as you fail the 100, it's putting the 200 in play, which is perfectly aligned with this big dip down from April. So this is going to be interesting. And it doesn't matter what the symbol is. It doesn't. The same stuff appears chart after chart after chart after chart. Here's Walmart. Has Walmart kind of enjoyed a nice ride up? Yeah, sure it has. Is that ride going to last forever? Probably not. At some point, it's going to get a little bit tired And it's going to lose the T line, and it'll look for the 20. And it's got a lot of love from the 20 in the past. Like it kind of lived here for a while. So, again, not the first touch. You've been trading above the 20, the 50, and all of its friends for a very long time. And that only happens for a short time. Like it's not infinite. And you're going to come back and check levels. And I think that's what we're kind of setting up to see here too. Visa's another one. There's your weekly chart of Visa. Does that look like it's pretty serious? I think so. 375 to 308. Break one level, find the next level. You break the 20, you put the 50 in play, right? Here we have, 50, 20, and coming back down to the 100. See the divergence? You're not going to hold. As long as you see that as you're approaching that major moving average, chances are you're not going to hold. And you were teased, right? With this candle in here. This is why you trust the chart. And you don't cheat. Now, it's kind of boring, not cheating maybe, but probably more effective for you, the trader. Let's look at our friend Aster because, everybody loves it. And starting with the weekly, not a lot of trading history because it's a fairly new issue, but what is it doing? It's testing the 20. Oh, and it's printing a buy signal. So let's go back. Remember, we've talked about this one in the past. Hello. So 4-hour chart is the entry onto the daily. So here's your 4-hour buy signal. Came on the 14th. Could have picked one up even sooner. But this consolidation would have knocked you out. But because this is just dead money, right? When you're consolidating like that. If you're in something and chopping like this, going nowhere, probably better off just to take what you can and wait for the breakout. Because we don't want to trade chop. Is all we want to do, or trade the breakdowns and the breakouts. There's that signal that we were talking about. Came right at a major moving average. See how you came, the 100 came in and you scooped it up. I love this. So this is what you're kind of looking for. And what are you hoping for? Well, you've just taken out that previous wave's high. So just look to the left. What's the next level? You're going to look in this 81 area. And just keep, as you hit them, you can see where your levels are. Just keep looking to the left. Now, is this the run that's going to, make new highs? I have no idea. All I know is that you got a good entry on the 4-hour that's transferred itself onto the daily chart. So you're starting to get that little bit of confluence. And lo and behold, I think there you go. Right? That's what you've been waiting for on Aster for ages. 4-hour, daily, and finally a weekly. And if you were kind of following that 4-hour philosophy, you would have been in right at the 50. Like, remember we talk about when major moving averages twist together? And that's what you're seeing here. Let me take the candles off. So you can see in here you have the 20 and the 50 and the 200. Even the 100 is in here. They're all kind of tangled up together. The big moves often come from those areas. That's what I like about this one. This is, you're basically breaking pretty much every major moving average that's relevant on this 4-hour. So I really like this entry, and you can see it looks like it means business. Are you going to get some pullbacks? Sure. But if you're not over leveraged and you're managing this trade, don't necessarily think of the home run. Think of what we were showing you here. Okay? Let me just take this off. I find when I'm, trading directly with the script, I may not have everything lit on my chart all the time. So here was the buy signal. We didn't get stopped out. And now you're open, right? These things are open, diverged up and to the right, so that's bullish. 30%, 60%, 100%, and it still has more to give. There's a short, same thing, right? 30-60. Another one, there's 30%. Then you would have been stopped out after that. And that being stopped out is a safety mechanism so that you don't ride the damn thing all the way down again. And if you're leveraged, that never turns out well. So this is just a very simple means of demonstrating what you can expect if you're doing it right. Are you going to hit every single one of your levels all the time? No, that's not reasonable. But if we do it right, we can certainly increase the probability of it. Absolutely. Just have to take the noise out of your chart. There's the 12-hour raster. I just wanted to take a look. Yeah. This is nice. This is a nice move. So if you're looking at this, you're probably wondering, like, why am I not making money the way I should be? And it's probably because you're making it too complicated, trying to do too many things, follow too many things, and not focusing on monetizing the chart and protecting your principal. That's what you should be doing. And whether you're in the system that we have that gives you the signals to buy or to short, there they are. That's it. Oh, there are my profit levels. Can you stretch these out? Sure you can. That's up to you. But I'm just saying, here you have a visual way of seeing how attainable these levels actually are on your chart before you even start trading. So you can customize it. But use the damn profit. Take the profit levels. Use them. This is how you secure what you earn, by actually taking it bits at a time. Well, but it sounds, I would rather just buy here and then wait to see if I can, till it makes its new high or whatever. Yeah, you can do that. Or you can be consistently taking your 30, 60, 100% 4 or 5 times instead of, just sitting there hanging on for whatever reason. And hopefully what you can see here is that rationale that you're thinking actually doesn't do you any justice and really isn't in your best interest. Because what you're probably recognizing now is, are you trying to tell me that I actually could have taken 100% 3 times as opposed to trying to hit some sort of a home run? Because you got to remember, your earnings get consolidated, right? So take more of what's yours more frequently and use the trade management system within the script indicator that comes loaded with stuff like the volume profile, all the moving averages you could ever want, all sorts of confluence tools. But the trade management component is probably the missing link for many of you, because it really helps keep you honest, and it forces you to take what's yours when it's yours, as opposed to watching it on your screen and then evaporate just as quick. Okay? So I know we didn't cover a lot of tickers today. I was more concerned about kind of getting everybody on the right page, or not necessarily the same page, because we're all different, right? But the right page is mitigating the risk, taking your money when it's available to you to take, and just executing a plan. Right? And you'll execute your plan to near perfection when you don't overwhelm yourself with too many symbols, right? That you think you have to research each and every day. If you want to trade futures, have a few futures contracts that you want to trade. Maybe you'll throw in some leveraged ETFs or some common stock, maybe even some crypto. Whatever it is, don't overwhelm yourself with things that you think you need to analyze. Get to know the things that interest you and excite you to trade, and get to know them well. And I think you'll find it's much more rewarding to not be kind of feeling like you're in the blender every day, spending half your time figuring out what to trade and then how to trade it. Have your set, have your plan, have your rules like we've shown, and I think things will be okay. All you have to do is do what you're told, and in each and every one of these waves up and down is your opportunity, and that's what our system allows you to do, is to actually monetize that opportunity safely. All right, so I'll wrap this up for today. I appreciate everybody sending notes and things that you want me to cover. I appreciate that very much. If you're not subscribed to our YouTube page, please just like and subscribe where you can, and then you'll always get notifications of these videos. Don't be afraid to send in your tickers that you want to analyze in our next stream, which is going to be Thursday at 4 p.m. And what you're seeing on your screen right now is a sign-up page for BYDFI, which is one of our partner exchanges. Up in the address bar there is the address to our page. And if you don't want to have to type all that in, you can simply use the code, which is capital K, 5, capital Z, 4, capital T, lowercase p. And that will kind of get you some new user bonuses. And I think you'll find BYDFI one of your favorite exchanges once you get on there. I really enjoy it, and I think you will too, and I do appreciate your support. If you have questions about the tools that we used here today, our indicator script with trade management or our Z-Score dashboard, feel free to message me, and follow us on TradingView as well at Blunhouse TV.